All right, a very good evening, everyone. Thanks for joining us for today's Corporate Connect webinar. So this session is organized by SIAS and supported by SGX Group. My name is Sunny, I'm from SIAS, and I'll be your host for today's webinar. Today, we will welcome Yoma Strategic Holdings, as well as our audience from YouTube, as well as our partner brokers, Tiger Life. So Yoma Strategic Holding is one of Myanmar's leading diversified conglomerate with businesses spanning real estate, mobile financial services, F&B, leasing, heavy equipment and passenger vehicles, and investment. Supported by over 5,000 employees and a strong nationwide presence, the group has built a solid foundation by strengthening its core operations and expanding across key growth sectors vital to Myanmar's economic development. Through its diversified platform and strategic partnerships with regional and global leaders, Yoma Strategic continues to capture long-term growth opportunities while driving innovations, good governance, and sustainable progress across its businesses. For today's webinar, we will kick off with a market highlight by my good friend, Mr. James from Tiger Brokers, followed by a corporate presentation by Yoma Strategic Holdings. Thereafter, we will dive into the Q&A segment. So before we dive deeper into Yoma Strategic, let's take a quick look at the latest development in the markets. So may I invite James to share with us the latest market highlights?
Sorry, just suddenly I can't turn on my video. A second. Okay. Yeah, I hope you all can see me here.
Yes, all good.
My slides here first. Yep.
All right, great.
Yeah. Okay, so good evening, everyone. Thank you, Sunny. I'm James, market strategist at Tiger Broker Singapore. So tonight I'll be just sharing some insight on the Singapore market. So let me go through a disclaimer here. This presentation is provided to you for education and sharing purpose only and does not constitute to any form of advice. Past performance is not indicative of future performance. Okay, some market insight. So here are some of the Singapore equity market highlights for the past 1 week. For example, CSE Global partnered with Amazon for deal out of 1.5 billion USD. SIA also announced special dividend of 10 cents annually for the next 3 years as well. So I will not go through one by one. And key things to watch this week would be US Federal Reserve meeting tomorrow. As for Singapore, nothing important will be released for the rest of the week. The most important data release was yesterday, no debts number. The number was quite good. Singapore export surged by 22% year on year in October. And we are seeing that electronic shipments went up by around 33% year on year, driven mostly by PC, IC, and these media products. Okay, this table shows the top performers and the worst performers in terms of week to date, month to date, and year to date returns. Basically, the week to date and month to date worst performers are mostly Singapore REITs companies. I reckon Singapore REITs have been under pressure lately because the probability of a December rate cut has decreased. Okay, the STI remains one of the best performing stock indices globally this year so far. The year-to-date return is about 25%. And if you compare the STI index with other indices in terms of 5-year annualized performance, STI is doing around 16%, whereas S&P 500 is about 15% per se. Here are some of the STI component stock performance and dividend yield. Again, I will not go through one by one. You can take a screenshot if you like, or you can find this table at the replay on the Tiger Broker app later. Okay, the key point here is that we have been seeing a broad-based rally across all sectors. In the past few years, STI index return were driven mostly by the financial sector, but this year itself, financials contributed only 11 percentage points of the STI 25% total return. So the remaining 14 percentage points actually came from other sectors. So this indicate to you widening market breadth itself. So the average return for December is about 1.6% over the past 25 years. This again suggests that although the STI index has already risen 25% so far this year, seasonality indicates that December can still be a strong month. Okay, here I want to show you the STI index and the FTSE small cap index and the FTSE mid cap index. So please take note that the STI index represents the large cap stocks in the Singapore equity market. At this point, the STI already went above the 2007 high. However, both the small cap and the mid cap indices are still trading below the 2007 peaks, meaning they are still the laggards here. If market breadth continues to widen, the rally shouldn't be just benefiting the large cap companies. We should also start to see small mid cap stocks begin to participate and stage a meaningful rebound. So I reckon it's kind of happening now. Okay, why are small mid cap gaining traction? A couple of reasons for that. Firstly, there are some measures to strengthen Singapore equity market, which is the $5 billion EQDP program. So far, the first tranche of 1.1 billion was awarded to 3 fund managers, Avanda, Fullerton, and JP Morgan. They promised to launch fund to target small mid-cap stocks. So Fullerton so far has launched Fullerton Singapore Value Up Fund on 6 October, which is now available as unit trust to retail investors. Avanda also has launched Avanda Singapore Discovery Fund on 1st October, but is only available as private fund to institutional investor and accredited investors. And I do not find much news on JP Morgan fund yet. Okay, other than MAS measures, Federal Reserve rate cut will also benefit the mid cap or small cap companies. So small mid caps, right, stand to benefit the most because typically rate cut will reduce the borrowing costs, lower the interest expenses, and directly improve the net profit margin. So many small mid caps companies are under-owned or under-researched. As a result, some are trading at inexpensive valuations and may be due for a re-rating as investors start paying more attention to them. Okay. Okay, here I want to show you that missing a few days in the market can significantly impact your returns. For example, the 10-year average yearly return for STI index is 5.9%. But if you miss the best 10 days over that period, if you miss the best 10 days each year over the past 10 years, your average yearly return will be drastically reduced to just negative 11%. So this is why I always advocate staying invested in the market. Okay, here are the Tiger Brokers welcome rewards. If you want to find out more, please scan the QR code here. And that's all for me. Yeah, thank you. So I'll be pass back the time to Sunny. Yeah.
Right. Thanks, James, for that quick update on the Singapore market. Really insightful to know some of the seasonality performance of the STI index, as well as staying invested in Singapore, as well as the mid and smaller cap, which are catching up to the big caps on the Singapore market as well. So today, that's one of the reasons why we have Yoma Strategic joining us today as well. So I hope the latest market updates was insightful to all of you. We will now pass the time over to Yoma Strategic. Let me welcome Mr. J.R. Ching, which is the CFO, and Ms. Jane Kwa, which is the Head of Investors Relation at Yoma Strategic Holdings. Okay, So over to you, Mr. Ching and Ms. Jane for your corporate presentation.
Good evening, everyone, and thank you very much for hosting us tonight on this presentation. It's probably been a while since we've had one of these, particularly with the breadth of your investor base. So we thought we'd start with just a brief overview of Yoma Strategic. Sunny, I think you've covered actually many of the key highlights that I was going to cover already. And then I'm going to hand it over to Jane to go through a bit more of an in-depth review of each of our various businesses. Just to start, and can we throw up our presentation? Hang on, yeah. Is it showing?
It's loading, yes.
Okay.
Okay, we are at the main page now.
Okay, great. Just to give again that brief overview of who Yoma Strategic is, I think as is clear to everybody, we are listed on the Singapore Stock Exchange. We were the first, and we are probably the only Myanmar-centric business that has our listing in Singapore. So it will give a unique access to Myanmar exposure through Yoma Strategic stock. In addition, we do have a strategic partnership and strategic investments from a number of key institutions, but we've highlighted on this page Ayala Corporation from the Philippines, as well as Tokyo Century from Japan, are large investors with around a 15% stake, as well as a slightly north of 5% stake for each of those two corporate partners. Again, I think as was highlighted, we have a broad-based nationwide footprint across Myanmar with over 5,000 employees. I think to highlight here, and that's very important, is that we actually have more than 30 years of operating experience on the ground in the country. So we're very familiar and very experienced with operating within this very challenging and difficult market environment. I think lastly to highlight is that we are quite focused on strong corporate governance. We've consistently been part of the top 10 of the Singapore Corporate Governance and Transparency Index, and we've won a number of awards through the years, whether it's for the best managed board, the best annual report, or the best investor relations. Moving on, I think, again, it was already highlighted that we operate across some key sectors within Myanmar's economy. We focus on 5 key major lines of business, the largest of which is Yoma Land. As a property developer, we are the largest residential property developer within the country, as well as having a number of other activities around leasing, estate management, as well as amenities provided to our residential estates. On the food and beverage side, we are the largest restaurant operator in Myanmar with 81 stores within the country. Over the last year, we've also started our expansion where we've opened some stores in Thailand. There we've got 2 so far, but actually a third one was recently opened in October for our local Myanmar brand as the expansion into Thailand continues. The third platform is Wave Money, where we are a substantial financial services platform. We are the first mobile financial services operator and have a very, very substantial fintech platform that delivers both remittance services as well as e-wallet services, and increasingly additional value-added services to our customers in that space. The 2 smaller platforms are our leasing business, where we're actually the largest vehicle lease and rental operator in the country with over 800 vehicles, and a Yoma Motors distribution business where we cover both heavy equipment as well as passenger vehicles. Just more recently, in terms of some key financial highlights from our first half, we announced results over the last 10 days from our first half performance. This is for the period ending 30th of September. The first thing to note is that there was broad-based revenue growth, where revenue was up almost 20% to over $113 million. Year over year, that was a very, very strong performance. In fact, it was our 6-month highest performance in terms of revenue. So it was record revenue over a 6-month period that we just experienced over the last 6 months. And here you do have Yoma Land, so our real estate development as well as services business, our restaurants, as well as Wave Money contributing over 90% of the revenue. So if you want to talk about the key drivers around the performance of the group, it's going to be around these 3 businesses. In addition, you saw improved profitability. So our core EBITDA, which reflects our core operating earnings, so the actual almost cash profits coming off of our business, was up almost 50% year over year to north of $20 million. I think the notable thing to see in these figures, though, was the fact that our EBITDA margin improved from below 15% to over 18% year over year. This is a reflection of a shift in our product mix, particularly in the real estate division, as well as some continued focus around cost controls across much of the organization. And when you take all of this together, the loss before tax narrowed significantly year over year from -8.3 to -4.4. I think it's also important to note that usually our business has a bit of seasonality embedded within it. So the first 6 months of the year is where we usually have our slower period because of the fact that we're in the monsoon season in Myanmar, as well as the fact that the month of April is taken up very much by the Myanmar New Year holidays. So usually, again, we see a much, much stronger performance, both in terms of top line as well as in terms of bottom line in the second half of the year. Just lastly, then, in terms of balance sheet, we do continue to keep a very, very strong focus on managing our balance sheet. Cash balances in the last 6-month period increased substantially to over 30 million, so quite a healthy number that we're sitting on as at the end of September. And over the medium term, we are committed to reducing our gearing ratio. So currently, it stands at about 18.6%. I think you're going to see that number fall to below 15% in the medium term. And here, we've also said that we have a shift in our borrowing stance to move away from what we previously had, which was a lot of foreign currency debt, into more Myanmar denominated borrowings. This will enhance our flexibility in terms of managing cash flow because it matches more closely to our cash inflows. In terms of those cash inflows, we saw operating cash flow rise to almost 17 million in the last 6-month period. This increase was mainly driven by collections from our real estate business and the life cycle of those projects within that real estate business. So we were very much in the cycle of collecting cash and delivering projects versus at the start of every project where we're launching new units and therefore consuming working capital to complete those projects on time. So I think overall, again, a positive stance in terms of our balance sheet and also the momentum around the overall businesses, both in terms of revenue, core profitability, as well as then in terms of cash flow. With that, I'll hand it over to Jane to go through a bit more detail around some of the key businesses. We've also got some videos, so hopefully those videos work and will play because I think it's quite interesting to see on the ground what's actually happening with a number of our businesses. So with that, I'll hand it over to Jane to take us through the key business drivers.
Okay, so starting with Yoma Land. Yoma Land is one of Myanmar's leading real estate developers, anchored by 3 large-scale flagship developments. If we look at the map, Panglai Estate, which is located at the west of Yangon, is a high-end luxury estate featuring houses and low-rise residences priced from about $500,000, built around the country's top golf course. At your east side is Star City. It is a high-density township offering mass, mid and upper mid residential products starting from approximately 50,000. And Star City is home to some of the best sports facilities in the country. And if we look at the center, which is downtown Yangon, we have a major mixed-use development called Yoma Central that is currently under construction. And it will eventually comprise office, residential, retail, and hospitality components. So beyond our sizable land bank of about 6 million square feet, which can be developed over the next 5 to 7 years, depending on the market, the group has also adopted an asset-light strategy, partnering with local landowners to launch new projects without heavy upfront land investment. So if you look at the past 18 months, our execution capability has remained strong. In the first FY 2025 and first half of this year, we handed over close to 1,000 units, which is 4 to 5 times more than the next developer, demonstrating both healthy demand for our products and our ability to deliver at scale. So our development pipeline is supported by a very healthy revenue backlog of 93 million. So these are units that have been sold but has not been reflected in our P&L. We recognize revenue based on percentage of completion. So with this 93 million, it gives us very good visibility over the next 18 to 24 months on how Yoma Land development revenue will look like. So estate services continue to grow steadily as well. If we look at Star City, it now has more than 8,500 residents, roughly 3 times the level 5 years ago, while Panglai Estate has grown to 1,300 residents, supporting recurring revenue and operating efficiency. So looking ahead, beyond the ongoing projects that we are selling, which is more than 90% sold and booked for the units that we have launched, the group will continue to introduce new launches in line with market demand. So in fact, we have launched 2 projects in the last 2 months. The first one is Wisteria Villas, an exclusive 5-villa landed development within Panglai Estate, which was launched at the end of September. So each villa sits on the 4,000 to 6,000 square feet plot. So they are big and they're priced between US 1.2 million to 2 million. As of today, we have sold and booked 3 villas. The second product is called Evergreen, and this marks our first condominium development in some times, as most launches within Panglai Estate over the past decade have been landed products. So the 128 units project was launched in early October. We have released 64 units, and so far more than 50% have been booked and sold, further reinforcing the demand for quality housing. Okay, so to capture this demand, the group is also exploring opportunities not only within Yangon, but also beyond it. We are currently evaluating development projects in other cities. So with that, I will show you a video showcasing our estates, our products, and the lifestyle we offer to our residents.
At Yoma Land, we believe real estate is more than buildings. It's about building communities. Across our neighborhoods, life is thriving. With weekend markets, wellness activities, and family-friendly fun that brings people together. Because here, community isn't just a concept, it's the heartbeat of everything we do. We've thoughtfully planned every space, from parks to playgrounds, to cafes, restaurants, and retail shops. We've even built an international school, even a preschool and a hospital, to support vibrant, everyday living. And we're not done growing. Yoma Land continues to expand, creating new homes, new opportunities, and new ways to live. This is more than a place to live. It's a place to belong.
So as you see, we are not just selling homes, we are actually offering a lifestyle. We believe this is one of our key competitive strengths and a major driver of the continued demand for our development. Okay, so next I would like to highlight our F&B business. So Yoma F&B continues to build on its position as Myanmar's largest restaurant operator, strengthening its nationwide presence while exploring selective international opportunities, starting with Thailand. So our platform now comprises 79 restaurants across Myanmar and 3 in Thailand. In fact, we just opened one recently under 2 highly recognized brands. I think KFC, we needed no introduction, and YKKO is a very well-established, popular local brand. Beyond our strong brands, the platform is further supported by strategic partnership that we have with Foodpanda, Coca-Cola, and WavePay, which enhance both our market reach as well as delivery capability. Domestically, we continue to benefit from resilient consumer demand and ongoing urbanization, with more of the population moving from the rural area into cities such as Yangon. So these structural trends have translated into stronger store productivity, higher average ticket sizes, and broader urban coverage. So if we look at last year, same-store sales grew by more than 50%, and same-store transaction grew by more than 20%, underscoring the strength of our platform. So internationally, the YKKO brand is also gaining meaningful traction in Thailand, one of the region's most competitive F&B markets. Despite being a new entrant, we have built brand awareness quickly. Within just 1 year, we opened 3 restaurants across Bangkok, each in a distinct trade zone, a major mall, MBK, a high-traffic kiosk in Central World, and a standalone shophouse located in a residential neighborhood with a large Myanmar community. So we have served over 60,000 customers so far, reflecting the growing acceptance of Myanmar's cuisine among a broad base of diners, not only the Myanmar community. In fact, we are preparing to open another outlet in the first half of next calendar year. So in April this year, we have also brought YKKO to Singapore through a pop-up event where we served more than 700 bowls over 4 days. We have a short video to highlight the pop-up event. We'll go to that video. So this encouraging performance in Thailand and Singapore gives us confidence that YKKO has export potential and can be scaled selectively in other regional markets. It also positions us to explore opportunities such as branded packaged food, extending the brand's reach beyond physical stores. So moving on to the Moving on to the Another key revenue driver is Wave Money. So Wave Money was founded back in 2016 as Myanmar's first licensed mobile financial services operator, which is MFS in short. At the time and still today, when the country remains heavily cash-based, with nearly 70% of the population unbanked. So at the time of the launch, financial transactions were conducted mainly over the counter, which is OTC, meaning customers visited a neighborhood Wave Money agent, often a small convenience shop, handed over cash, and the agent completed the transfer on their behalf. So this simple OTC service quickly became essential for families sending money across cities, townships, and remote rural villages safely. So over the years, the agent network expanded rapidly. Today, Wave Money has more than 60,000 agents covering majority of the country. This agent, I would say, have become the backbone of Myanmar's financial infrastructure, bridging distances, building trust, and making cash-to-cash transfer accessible to millions of people. As mobile adoption accelerated, if you recall, back in 2013, the government awarded mobile licenses to international operators. So mobile penetration increased rapidly, with SIM card and smartphones becoming widely accessible and affordable nationwide. So this shift paved the way for Wave Money to evolve from an agent-led cash service business only to a broader digital financial platform. So right now, customers or corporates today can use Wave Pay mobile wallet to send and receive money, pay bills, top up airtime, and make QR payment and other digital transaction while relying on our agents for cash in and cash out and cash management services in a country where cash still remains essential. So this combination of digital services supported by a large physical agent network is what makes Wave Money unique. It brings together the convenience of digital finance with the accessibility of a nationwide cash ecosystem. So if you look at the scale of Wave Money's reach, is reflected in its operating metrics. Last year, the platform has processed 34 trillion kyat in transfer volume, which is equivalent to over 10% of Myanmar's GDP. And we now serve close to 8 million active users, with mobile wallet adoption continue to rise. So the introduction of MMQR in February this year has also further accelerated the shift towards digital payment. So what is MMQR? MMQR is Myanmar's national QR standard, allowing customers to make QR payment across different mobile wallets. So since its launch, Wave Money has expanded to over 200,000 QR merchants across the country, and we are expecting this number to continue to grow as our team onboard new merchants. So apart from these QR payments that we expect to grow, the other growth drivers for Wave Money include first, the larger user base, which has driven higher digital wallet balances. As customers kept more funds in their wallets, Wave Money earns an interest on these trust account balances. So this has also contributed to more than a 2 times increase in interest income in our recent results. Because this interest income carries virtually no associated expenses, it directly improves Wave Money's margin. So we expect this to continue rising as the wallet activities and balances grow over time. So if you look at the picture, you can see that on 14 October, Wave Money and 2C2P, which is a leading Southeast Asian payment platform, launched the 2C2P Wave app in Thailand. And that offers Myanmar workers working in Thailand a fast and low-cost remittance way to remit money from Thailand to Myanmar. So the app, since its launch, has gained strong traction with rising user adoption. So we expect this to be another key driver for Wave Money. So in the longer term, Wave Money, like other wallets, is also developing adjacent services such as Wave Score. WaveScore is an in-house credit scoring engine. So our team is currently collecting and refining data to validate the scoring model and ensuring its accuracy with the aim of enabling future offerings in microcredit, merchant services, and other data-driven financial products. So with that, I will show you how Wave Money works in practice.
Thank you, Ma. Đi đi, không có nên đợi Hương Liên người ra chữ. Quét lại mà nó. Sit down now, we. Cái thứ gì vậy bạn? Quét lại mà nó. Đi con to hả? Đi con to lẽ quét lại rồi. Nào nó, we. Nè, team gì? Quét nè, be.
So this video shows that how this platform is actually embedded to everybody's day-to-day life. And we do see that, Wave Money has a huge potential to grow in the longer term. So with that, I will touch on the outlook quickly, which is the final section. So some of the key macro trends that will continue to shape our business across real estate, F&B, and mobile financial services despite the political climate is number one, urbanization and population shift. If we look at urbanization, it continues to accelerate with more people moving from rural area into major cities such as Yangon and Mandalay. We are also seeing population movement from conflict-affected areas to safer urban centers. So this shift have increased demand for housing, daily consumption, and essential services, especially in Yangon, all of which directly support our real estate products, F&B products, and also the use of financial services, and also Wave Money. Secondly, the demand for hard asset. I think in an environment of inflation and currency volatility, real estate remains a preferred store of value. Many individuals and households continue to prioritize property ownership as a long-term hedge, which has supported sustained sales momentum across our real estate products. Number three, I think I've touched on it. Digital usage will continue to grow with more customers relying on mobile wallets, QR payment, and online services for convenience, which is the trend that we see across many emerging economies. At the same time, Myanmar also has its own nuances and remain a largely cash-based society where the over-the-counter transaction continue to play a role in everyday money transfer, especially outside the major cities. So Wave Money model, where digital capabilities are supported by a nationwide Asian network, position us well to serve both segments as the market evolve. Fourth, we still continue to see resilient local consumption, especially in the major cities. So despite the macro uncertainties, we continue to see everyday consumption remain robust, reflected in our F&B platform. F&B demand continue to be strong across income levels, supported by urbanization and also lifestyle changes. And the final one is more of a challenge. I think talent gaps and labor mobility constraint remain an ongoing challenge across the country. As a responsible corporate, we continue to invest in training, development, and retention to support our operation and maintain service quality. So before we start the Q&A session, I would just like to briefly touch on the March earthquake. Overall, we have disclosed that while the overall financial impact on the group was minimum, the disruption to communities in Upper Myanmar was significant. Many families and small businesses were affected. We are grateful that our staff were largely unharmed, and our teams on the ground responded quickly to ensure everyone's safety, restore services, and support local relief effort. Thanks to their dedication, operations were fully restored in April. We have prepared a short video that highlights the situation on the ground and how our teams come together, not only Yoma, but also our sister company FMI, to support the affected communities during the recovery period. So with that, the video also reflects the collective effort of our people as we work together towards our mission of building a better Myanmar for its people. So thank you for your time today. With that, I will pass it on to Sunny to open the floor for the Q&A session.
All right, thank you, Ms. Jane and Mr. JR, for that very detailed and insightful sharing. And of course, the last part there, we can see a very strong company culture in Yoma in helping the relief effort after the earthquake. So I'd like to thank JR and Jane again for that very detailed and informative sharing with us. We will now move on to the Q&A segment, where I will also invite the chairman and CEO, Mr. Mervyn Pan, to join us as well. So if you have any questions, do submit them in the Q&A chat. And of course, for our audience on the YouTube platform, you can click on the link to join us in Zoom so that you can post your question as well. And for our audience in Tiger Brokers platform, we are seeing your questions on the chats. So if you do have any questions, do put it in the chat and we endeavor to answer as many questions as possible in this Q&A session. Okay, so we'll move on to the Q&A session now. I will start off with the pre-submitted question first. Some of them are from our SIAS members as well as investors of Yoma Strategic. So they are very sharp questions, so I try to put it in a very professional way. So the first question that came in the pre-submitted list was, is it a good time in this company as the situation is not as clear yet? Maybe giving a context to this question, because we saw the presentation on the first half of 2026 key financial highlights. We see that the revenue is increasing and we see that core EBITDA is also increasing as well. So that's a very positive trend. And we saw that the losses before income tax is narrowing to just a very small amount, I would say $4 million. Are we looking at the company turning positive in the next financial year or in the coming quarters?
I think just in terms of the financial performance, let me answer that question before Melvin jumps in with his response about, I think, the broader attractivenesses of the Yoma strategic. I think just to remember, for the last 2 years, the entirety of the financial year were both positive, right? So we made net profits both in 2025 as well as in 2024 for the full year. I think we were also trying to remind potential investors that, again, the first half of the year we usually actually have a net loss position and a much stronger second half of the year in terms of coming out of the seasonality of the monsoon, and just in terms of the actual year-end developments that we have from a financials perspective. So I think we would see that trend continuing this year, just in terms of the momentum behind the various businesses. At this stage of the game right now, we would see that trend continuing for 2026.
Thanks, JR. So I think that this question around whether this is a good time or this is a good situation for Yoma, let me answer in three distinct different ways. Yeah, I think one is around the operational performance, two is around political environment, and three is on the share price. On the operating performance, I think we acknowledge that there are lots of challenges in Myanmar, and that relates to restrictions around import limitations, capital control, as well as just an overall challenging business environment given the backdrop. I think notwithstanding that, you can see from our results, particularly over the last 3 years, that we are significantly seeing growth, whether in local currency or in US dollar. We have seen a good level of growth, which I think reflects the fact that we have a very strong foundation, particularly in our core businesses. Yeah, core businesses being in real estate, where development has accelerated, not slowed down. And I think our reputation has grown since the start of the COVID 6 years ago. And I think you can see that in our F&B business as well, that the growth has been quite consistent, despite the fact that the number of stores have reduced. So from an operating performance perspective, I have to say I'm very appreciative of our team, who's been able to really deliver above and beyond our expectations year on year. I believe that will continue despite the continual challenges. The second topic is I want to address the politics. There's a lot of question mark people have about the politics, right? If the question is, what is the situation now and is it a good time? I think maybe this is referring to the election that's coming around the corner starting at the end of this year, and a new government forming in April. I always say that I don't have my crystal ball. I'm not able to predict exactly what will happen, but I would say that I'm cautiously optimistic. If a company like ours, who is operating in Myanmar in a single country, has been able to continually grow in the most difficult 5 years, I think the next few years we are nimble enough to deal with whatever is thrown at us. But from a political perspective, I think it's a major milestone for us to see an election that will happen at the end of this year. I think whatever people say, I think it allows the government and the country to move away from this temporary emergency government into a government that is actually elected by the mass. And that also allows us to have a much more legitimate and well-connected relationship with our neighboring countries. There's no doubt that Myanmar is an important country to our neighbors. Our neighbors being China and India, the two most populous countries in the world, and also Southeast Asia, which is a major trading bloc with Myanmar. So after the election, we would sincerely hope for a much stronger trade going forward. And hopefully the initial foreign direct investments are likely to come from these countries. So I think from a political perspective, I can't comment on the outcome of the election, but I do feel that normalization through an election process is a positive kind of direction. Last but not least, everyone is kind of thinking about the share price, and that I really have lost my crystal ball. I can only say that you can see from our team, the only thing that we can do is continue to try to do more, right? If revenue goes up, EBITDA goes up, net income goes up, debt is down. Whatever you say about the macro environment and the doubts that people may have about the future, you've got to kind of price that in at some point. Yeah. So I think that is what we can do. That is the only thing that we can do. And I hope that that is going to suddenly translate into a share price momentum at some point. I don't know exactly when, but I feel pretty confident that that will, what we've done will contribute to a better outcome for our investors.
And just on that valuation point, I think we're asked many, many times, does management have a view of the fundamental valuation of the business? And I think both in terms of net asset value as well as, let's call it sum of the parts value, we do believe at this stage, given where the share price has traded over the last couple of years, that there is a dislocation between where management, views and sees the fundamental value of our businesses versus where the share price is.
All right, thank you, Mr. Mervyn and Mr. Jia, for that answer. I think you read a lot of our viewers' mind, including my mind as well, understanding the political situation in Myanmar, how is the country going to progress going forward, and of course, talking about the capital markets and share price performance as well. That leads us to the next question in the pre-submitted list. Will there be any dividends plans for Yoma Strategic in the near term?
So we do have a dividend policy, which is to return part of our profit to shareholders. I think in the very near term, we are still keen to reduce our gearing. And also we have a sizable project in Yoma Central that we will be looking to put together the overall funding plan so that we can complete the project. That has certain capital commitment, and until we're very clear on how we fund that, I think it's only prudent that we view the dividend kind of arrangement in view of those capital commitment. But I mean, I think I can assure shareholders that dividend is a topic that we regularly talk about at the board. And as soon as the timing is appropriate, we will be resuming dividends.
Hey, thanks for that sharing with us. The rest of the pre-submitted questions are mainly about the political situation, the outlook of the company, which we can talk about deeper later, and of course, some of the outlooks in the Myanmar economic position. Okay, so with time interest in mind, I'll move on to the Q&A list. I can see that there's a flurry of questions coming in. I think the first question that came in was about properties in Myanmar, whether foreigners can buy properties in Myanmar, which Mr. Mervyn answered in the chat. Maybe you want to share a few lines on that, on whether foreigners can buy properties in Myanmar.
Yeah, I think similar to Southeast Asia, many Southeast Asian countries, landed properties are really only allowed to be bought by locals. Whereas condominium, there is a condominium law that allows certain portion of a building to be bought by foreigners. But at this particular point, frankly, we have not even bothered with any of that. All of our properties are sold to locals, and the local demand is extremely high. So I think that's what we will focus on right now.
Okay, so I hope that gives some clarity about property ownership in Myanmar. The next questions in the Q&A list is, how is the company addressing the operational risk in Myanmar? Are there any contingency plans in place?
I think risk management is kind of the main thing that we do, given the range of risks that we've seen in the last 6 years. So operating risk is definitely something that we look at a lot. When we assess our overall risk, I think the key risk that we have identified would include actually overall kind of political environment. It would also include import, export restrictions, as well as things around infrastructure, so electricity, utilities, etc. So I would say that we are assessing these risks, and we have built in certain redundancies. The fact that we're able to perform is testament to the fact that we have put in this redundancy. And I would also say that risk and the complications also create an opportunity for us to distinguish ourselves, right? I do think that you can see we have growth. I don't think every company in the country has growth, and it's really, and we're a bit lucky sometimes, but it's really about being able to be careful, but also be nimble in addressing the risk, and that allows us to maybe sometimes have a competitive advantage.
Hey, thanks, Mr. Mervin, for that answer. I think I do agree with you. The past 6 years has been turbulent, I would say. And going forward, the outlook seems to be more promising. And I believe that will sort of benefit Yoma's business going forward. And that is very clearly reflected in some of the news that's coming out from Myanmar right now. So the next question comes from a viewer from Mr. Wang, I believe. As his question is, as one of Myanmar's leading diversified conglomerate, how is Yoma strategy assessing and mitigating exposure to climate-related risks? And I want to add on to that questions and also the natural disaster risk that we have experienced recently. So how does Yoma strategy sort of a plan if, let's say, such occurrence were to happen again? How can business continuity not be affected by such a phenomenon from happening?
Yeah, I think we do assess this, and we can't quantify every single things that may come up. But if you look at the natural disaster that we've seen, right, earthquake, I think maybe not so much related to climate, maybe not. But we've seen a number of things around flooding, around electricity supply, etc. And personally, I think it is probably in this generation of businessmen. The climate issue is something that is very dear to our heart. Yeah, I think Myanmar is also particularly sensitive. So first of all, from risk assessment perspective, we do assess things around climate risk, flooding risk, etc. is regularly assessed from a construction and continuity perspective. I think I've mentioned already many times that import these restrictions, whether it's regulation related or logistics related, is being assessed. And then from our business perspective, you would notice that we have a business called Yoma Micropower. Myanmar has a huge shortage of electricity, and it is our firm belief that there is an opportunity for a large country like Myanmar to build distributed solar renewable power network. So what this is instead of building a big national grid, we are looking at certain smaller areas where we will build solar sites and potentially also a mini grid around certain villages. This creates a more efficient network, renewable energy at a time when there's not enough power around. So I think we have around 600 of these sites. We hope that this will be something that will contribute meaningfully to clean energy.
I think just to add on to that, in terms of our real estate developments and our most recent product launches that we've done at both Star City and at Punlang, we've offered a renewable solution to homeowners and home buyers. So the Estella project, which was over 600 units of an affordable landed housing concept, each of those various units came with solar power panels on their rooftops. In addition, the Sandagu project, which was most recently launched in January at Punlang Estate, is also coming with the ability to put solar into those projects. So I think what we're doing is not only from a large business opportunity like Yoma Micropower, but also embedding these types of climate-related, but also power-related issues into our other businesses like real estate. We also look at it from an F&B perspective on where we can add solar. We're trying to embed to address climate-related issues across all of our businesses.
I think there's a competitive advantage. Yeah, in a country that has a lot of power cuts, a combination of solar plus battery in the latest offering allows us to serve even if there's 6 hours plus of power cuts during a day. So I think that's one of the reasons why people feel very confident in moving into our estates.
Right, thanks for that sharing. I think with that answers, I think more or less the business or the real estate that you guys are selling is more or less a bit self-sustainable in terms of outage and gaps for a short period of time before the national grid comes back on. So that gives more resiliency to the business and your operations as well. Okay, so that is one of the risks that that can be mitigated with these action plans in place. So moving on to the next questions, this viewer is saying that is the company taking any mitigating currency risk processes, and how effective are these measures given that you are trading partners across the various regions?
Yeah, do you want to take that first?
Yeah, so as you rightfully point out, currency volatility and some of the capital controls has been quite a substantial challenge for us over the last 3-4 years, particularly the depreciation of Myanmar Chat. So there's been a number of things, both on, let's call it the P&L side and the cost side of things, as well as in terms of cash flow management that we've been doing. The first around the cost side of things is there's been a heightened focus around localizing our supply chain, and therefore the cost of the inputs. So whether it's our real estate business, which is looking to source a number of supplies locally now, or our F&B business, where, for instance, we get all of our chicken locally within Myanmar and have Myanmar chat terms for those contracts. There's been a heightened focus over the last 5 years, but it goes back even a bit longer than that to try to localize our supply chains as much as possible. In addition, since COVID and the political situation arose in 2020 and 2021, we've also been looking to localize our fixed cost base, and our fixed cost base is primarily around our human capital costs, and therefore localizing management, localizing the executive classes within each of the various businesses to make the costs actually in Myanmar chat versus the expats, which would require foreign currency or US dollar type of salaries and costs. So I think there's been a big effort to try to, let's call it, then match the revenue stream with our expense base to make sure that we're a much more localized company across both revenue as well as expenses. From the cash flow perspective, this is the other thing that I was mentioning on our balance sheet slide, is we are looking to replace almost all of our foreign currency denominated loans and debt and replacing them with Myanmar chat loans. So that will definitely manage the cash flow position and the situation in terms of being able to generate Myanmar chat revenues and cash inflows, and then ultimately using those cash inflows to pay off the Myanmar chat loans and debt going forward, and not having to rely on the conversions to pay off foreign currency debts.
Okay, great. Thanks for that answer, JR. I think that will mitigate some of the currency risk if we deal in the local currency, matching the revenue with the expenses payout then. The next question is coming from Mr. Harry Tan. The main business of Yoma Motors is I would like to expand that question. Among the diversified business of Yoma Strategic, which pillar of it is the main business, main contributor to Yoma Strategic profits? And as well, is there any local vehicle manufacturers, or what are your competitors on the ground there in Myanmar?
So let me answer the Yoma Motors first, and then also on the overall group, right? So Yoma Motors is our vehicle distribution business. We are the nationwide distributor for a number of brands, including Hino Motors, Mitsubishi Motors, Volkswagen, and we're starting to do a couple of Chinese brands like Hongqi. So the Chinese brands, we're not so much national distributors. Essentially, our strategy is to represent certain brands and promote them and import from overseas. So we don't yet do local assembly, although we are considering doing some of the what they call semi-knockdown SKD assembly. It is for now a relatively small business because the importation of passenger vehicles are somewhat limited. So we are mainly just doing after-sale service. And that's one of the reasons why we're doing some of the Chinese brands, because our partners are assembling them in country, which allows them to import, and we can sell them. But I think overall, since COVID, we've taken quite a deliberately focused view on our business. You can see that we have, as JR mentioned in our presentation, we have a number of businesses. Each of them, frankly, is very promising. I think we won't be in them if we didn't feel that over the long run, they are very promising when the country really grow and expand. But in the near term, we've deliberately decided that we will focus on the lowest risk, highest cash flow businesses, which for us right now would be the real estate business as well as F&B. Real estate, because we have a large land bank, we have a great reputation, and and all the construction is funded from pre-sales. So there's a very limited amount of working capital that's needed from the company, and yet we're turning kind of land bank into cash with a sizable, attractive profit. So that is very good. And F&B, I think, given the brands that we have, and it's a good cash business, it's been growing well and it's been profitable. Other businesses, we are expecting each business to at least be cash flow positive. But at the same time, I'm very cognizant of the fact that in the near term, because of whether it's import restrictions or because of the economic environment and high inflation, it is sometimes better to just run it with a slightly lower scale. So we want it to be cash flow positive. We don't need to grow it very much every year. And in a way, I'm trying to keep it in a leading position in the market, such that if the country really opens up and grow fast again, which I'm sure it will at some point, then we'll be the front of the queue in benefiting from the environment.
Right, thanks for that answer on focusing the business on the real estate and F&B sector. Just now I saw that video on the F&B pop-up in Singapore, really interesting, especially at the dinner time now. And I'd like to thank the management team for staying with us even after 8 p.m. to answer all of these questions. Let's go to one final question before we call it a day for today's webinar. The last question coming in is saying that, what is the company's strategy for managing its debt level, and how does it plan to reduce its debt to equity ratio?
Yep. I think on the balance sheet slide, I think, again, as we mentioned, aside from the fact that we're looking to, let's call it, transition from foreign currency denominated debt into local currency denominated debt, we also have, over the medium term, and I think Melvin also highlighted this, the intention to reduce our overall gearing levels. So currently it stands slightly north of 18%. I think you're going to see in the medium term that number dropping below 15%. And I think we're going to be in the long-term comfortable range of between 10 and 15%. If I think about that in terms of actual dollar terms and dollar amounts, it's going to be about an additional $20 million equivalent of deleveraging. Okay. So the source of where all that's going to be coming from is primarily operating cash flows and the free cash flow that we're able to generate off of our businesses. As you see, the company has been able to rebuild its cash balances. So we're now sitting on a pretty healthy balance of north of 30 million, almost $31 million, and we're generating operating cash flow in each of the various periods to be able to be deployed for these purposes. So the pay down of debt, I think you're going to see coming from, again, the operating businesses and the cash flow generation that we're able to generate there.
All right, thank you. Thanks for that answer. I think that is all the time that we have for today. I'd like to thank Mr. Mervin for joining us today, as well as JR and Ms. Jane Kwan for sharing with us in details the very insightful business of what Yoma Strategic is doing in Myanmar. I have a deeper understanding of what Yoma is trying to do for the next few years already in terms of the business prospect and the outlook. So we come to the end of this week Corporate Connect session, and we hope that all the audience on our various platforms on YouTube and Tiger Brokers found this session very informative and useful. In case you missed any of today's session or information, you can always rewatch them on the SIAS YouTube channel. And of course, do visit our website to get more updates on the latest investors education program and initiative that are coming up. So I want to thank Mr. Mervin, Ms. Jane Kwa, and Gerard again. Our next Corporate Connect session will be on next Thursday, 27 November, featuring Elite UK REIT. So do remember to register and sign up, and I hope to see you there. So thank you once again for joining us this evening, and I hope to see you guys again very soon. Okay, thank you and have a good night, everyone.
Thank you very much. Thanks, Sonny.
Thank you.
Thank you.